Okay, everyone, another week done, and we're going to go over some weekly charts, talk about what happened this week in stocks, crypto, forex, try to figure out a game plan going into next week. As always, make sure you're going to statsedtrading.com. You're signing up the email list there completely for free, where I make sure I can get in contact with you for more content like this or anything else I end up doing that I think is cool. I don't sell the email list. I don't share it around. It's just a great way for me to contact directly to you. Now, pretty wild week. Some signs that we may be getting into some problems. So let's just hop right into it. Let's stop wasting time here. So we're starting with Bitcoin, as always. It's just what we do. Big sell-off, which I talked about. I talked about on Wednesday how I was short as things were coming down here, but I was starting to take some off the table as we were coming into this prior high. I did, thankfully, had a nice big pop today. However, I wanted to note that we're still stuck within this range right here. Right? We're still hard stuck. So until we can build slowly and get above that, and then start to deal with this high from when the ETF was going to light the world on fire, I'm not going to get too bullish. But if we go to this weekly chart, it does kind of look like we may have had a fake breakout right here of this level, and then we may have had a fake breakdown of this level right here. So leave it to Bitcoin to make sure that both sides suffer. Could be what's going on. Again, I need to see some more time or some more price in order to prove that. Ethereum didn't get the pop with Bitcoin, so we're seeing this bifurcation again, which is very interesting to me. If this is something that we see for actually a long time, that's great in my opinion. I love more assets moving in an uncorrelated manner, because that's great for traders. It means I could be long something and short something else, and I don't expect this to move with that. So that's what I'm seeing. That's what I think we could continue to see. If we go into the dollar index right here, this is one of those concerning signs for an equity pullback that I'm seeing. So the dollar seems to be holding this level. It's bouncing up like I thought it would, but it's getting a little bit too high. And, this could still just be a bear flag, right? I don't want to write that off, where if we're just putting in a bear flag right here, and then we end up crashing back down through that level, that's going to be super bullish for stocks. But it was very, very weak before, and I expected this to do a little bit more in this kind of a zone right here. So we're actually going to refresh this guy. We're going to save and reload because my anchored view app was not working there. But yeah, I expected to see this bounce in this dollar index and then a pretty quickly continuation back down. And that's not what happened. So we continue to hold on right here. It wasn't an insanely bullish week. It was a bit of an inside week. But if we continue up on this level, then I think we could push and then maybe attempt these highs right here, which, as this is bullish for stock, it's bearish for equities. Now, if we go and we take a look at some of the components of this, and let's take a look at cable. Cable's just kind of chopping around here. So this, to me, could go in either direction, where, yes, we've bounced off the anchored view app from this low pretty sizably, but now we have weeks and weeks and weeks of action of absolutely no movement. So if this breaks higher, could quickly hit 1.3. If we break lower, then we got to watch that anchored VWAP again to see if we bounce at that level. Taking a look at gold right here. Gold continues to hold strong, continues to hold on to this level. I like what I'm seeing there in gold. If we can hold for any more longer and then bounce from here, then I'm going to be looking again on the daily chart or the shorter term time frame for a bounce in gold. We are holding very, very well against that level, right? And this anchored VWAP below as well. This, to me, again, looks very, very good. But we need that dollar reversal. Right? It's all contingent on getting that dollar pullback in order to make sure that these things kind of happen the way they should. If we take a look at Aussie Yen, which is another one that I like to watch right here, still struggling. right? Still struggling at this zone. Looks pretty opposite of the dollar here, right? So if we're going to have this issue with Aussie yen, we need to make sure that this is corresponding with the dollar. If this breaks, then the dollar also breaks, and I think we have a good trade here. Last currency I wanted to go over was Aussie CAD. I took a short on this week. I talked about how we were fighting this anchored VWAP from the weekly basis for a long time. We broke this week, so I am short this currency so far, up a little bit for it. Now, let's get into the equity markets. We're going to start here with the S&P 500. We're going to go SPY, and we are going to take a look at this from a weekly point of view. And not really too much to write home about one way or another this week. We gapped up. The week looks very, very solid. But I did quickly, even though we're looking at daily charts, want to go into a daily chart. And I did want to take a look at this daily chart on using an RSI just to kind of highlight something I did mention on Trader TV when I was with them this morning, that we are getting this RSI divergence. So an RSI divergence essentially means this new high has taken less momentum than the high before it. And that's just means that doesn't mean we're going to go lower, but might be time for a little bit of a rest, a little bit of a pause. And that's what I'm seeing in a lot of these different sectors and ETFs that I went through. What I did want to notice is if you take a look here, I have all of these sectors on Trade Ideas sorted by how strong they were over the last 2 weeks. And you see XLE, which is energy, you see USO, which is energy, and you see DBC, which is commodities, also a lot of energy. So with USO, we had a nice little break of this area. And I had mentioned a few times that I'm interested in this. If this can dig in and push higher, that's what we've seen. So very interested in oil next week, seeing if we can get a continuation there with that move. You know, we were made a whole bunch in uranium last year. Let's see, maybe it's going to be oil's year this year. That would also be pretty inflationary, which again could be bearish for the market. So a couple things that I'm seeing that could give us a little bit of a pause here in equities, but we're traders, so we're going to go where we see things. So I'm going to spend some time this weekend. Make sure you're following me on Twitter. If I find anything interesting, I'll post it. In the oil space or in the energy space, I may look for some names there. But I did want to talk about how I am looking a little bit from the short side of things on some trades as well. So we have Path here. This thing has been an absolute monster. But one scan that I'm using, that's right behind my head here, is stocks bouncing to anchored VWAPs from high positions. So these are stocks that are weak because the market's at all-time highs, and these stocks aren't, and they're bouncing and they're struggling at anchored VWAP. So you can see this anchored VWAP right here on Path that's keeping this down. So if we break into the gap next week, into this gap right here, I'll take a short. Maybe we'll go down to fill this gap right here at 20. But these are the kind of trades that I'm looking at. Stocks like Yelp, basically relative weakness. So if you look at Yelp here, you can see failed breakout right here. Again, the market and the tech sector is pushing against all-time highs. Yelp is not. Yelp is below those all-time highs. And then if we anchor a VWAP from this high, you can see under that anchored VWAP and struggling with it. So that's personally my game plan, just to hedge it against a really long portfolio, which I have, with some strategic shorts, you could say. Take a shot here or there on the short side to cover that long portfolio. If I'm wrong, then I'll be out of these things really, really quickly. And that's just little cost of insurance, you could say. But if I'm right and the market's going to pull back a little bit more, then, good. I can take some of those profits, and then as the market pulls back and finds support at a lower level, we can be looking to buy and then rinse and repeat. So thank you all for coming by. I hope you appreciate this content I do. If you do, make sure you like it and share it, and go to statsedgetrading.com and sign up for the email list there. That's all I ask. So thank you. Have a good weekend and get away from the screens.